Well, I just used the 179 vehicle deduction with bonus depreciation to buy a Lamborghini Urus, so I was pretty stoked about that one.
What are some like top strategies for people that more so that are starting a business that you feel like they don't necessarily think about at all, or they're not educated, that can hurt them initially as a startup?
Yeah.
That if they were to learn, or like watching this podcast and they knew earlier on, like they can kind of apply and kind of.
Yeah, so, since we're kind of heading into this little down period here, I feel like there's going to be a big spike in day trading again. Just like how there was a spike in day trading, like right when the pandemic started. Like everyone was at home and, they didn't have their job. So people were picking up all these new skill sets. One of the things that I just recorded a video on today is the importance of knowing whether or not you actually want to be a day trader, because there's tax implications on whether or not you make this specific election. So the government has this election called the 475F election. And its terminology is called the mark-to-market election in the IRS world. Essentially, right now, if you decide if you want to be a day trader, if you do not make this 475F election, and let's just say you lose money this year as a day trader, when you file your tax returns next year, you're going to be limited to only $3,000 in losses. So that means if you're on Robinhood or FTX or whatever trading account and you lose money, that money is going to be only limited to $3,000 in losses taken on your tax return to offset what other income you might have. But if you make the election, which is called the mark-to-market election, you'll treat the capital income you're earning as ordinary income, and all the losses you will experience will be considered ordinary losses. So you have no $3,000 limitation. Now you can deduct hundreds of thousands of dollars in losses if you need to offset other forms of income if you end up failing in day trading. So that election right there is super duper important, because that election has to be made within the first 3 months and 15 days of the year. So you really only have until about March 15th to make this election.
And there's different strategies for different brackets, I'm assuming, right?
Yeah, there is. If you're in a higher income bracket, then we start looking at how can we move money off of your tax return into a different company, such as like a management company. Many business owners don't think about this because they do a lot of the managing of their own company in their own company. Right? Maybe they're wearing the hat of hiring people. Maybe they're wearing the hat of doing research online to figure out whether or not they should set up an LLC, or they're speaking with tax accountants or attorneys. They're doing a lot of this management themselves, but they could all obviously set up a separate company that does 100% of this management, and their operational company can pay their management company. And this is a tax deduction. And this business doesn't have to file tax returns in the same year that this business does. So now you're playing with some of your money here and moving money over to avoid taxes over here. And you can offset the money that you have inside of your management company with completely different expenses.
At what point of income stream do you have to start looking at strategies like that?
I mean, I think it's important to know everything before you get into the game, but of course there's levels to it, and you don't want to get stuck in the mud. I think the first thing that you want to do is just get to profit as a business owner. And as you start getting profitable, so here comes Uncle Sam, the silent partner, right? And as your taxes start to become an issue, you're going to want to partner with someone who's more than just a tax accountant, someone who's just filing the returns. You're going to want to start to upgrade to also look at getting a tax strategist, someone who can help you reduce your tax bill by leveraging the tax code. And that's when you start having conversations around your entity structure, whether or not you should be an LLC or switch to an S corporation, or you should look at having a management company or even switching to a C corp.
That's interesting. And then that's what you guys focus on, right?
Yeah, that's correct.
So you guys only work with specifically like higher net worth individuals, or do you?
No, we work with a wide variety of people. The reason why is because there's entrepreneurs who we'll work with who get started in a business, and then next thing you know, they're making $1 million within 2-3 months. So we work with people who are just getting started, and we've worked with people who have been making millions already. And so the most important thing that separates us is our customers who come to us are looking for ways to reduce their tax bill, not just file a tax return. So there has to already be some income generated.
I see. Okay. And I'm sure there's like tons of laws. I mean, I'm still learning, and there's like, holy smokes, so many different ways. What's like one strategy that like just sparks you? Like you're like, oh, this is cool.
Well, I just used the 179 vehicle deduction with bonus depreciation to buy a Lamborghini Urus, so I was pretty stoked about that one. That allowed me
to elaborate a little bit on that.
Yeah. So, I mean, I'll elaborate on the purchase. The vehicle was like, I don't know, $280,000. The government allows for you to place a vehicle that's over 6,000 pounds into business use and write off the full purchase price if the vehicle is 100% used for business, which my vehicle is. And this vehicle that I chose to write off is a Urus, so it's more expensive. So that $280,000, although I only put maybe a $45,000 down payment, I'm able to write off that full $280,000 against my taxable
Your
income. So that generated a little north of about $110,000 in tax savings.